Hi, everyone. I hope this message finds you doing well. I'm David Silver, CEO at Instrumental Wealth, and I want to jump right back into where we left off around retirement income planning and how we handle things here at Instrumental Wealth with our clients that are planning to retire soon or that are already retired. Look, in your retirement, there's certain expenses that, even though we don't have debt per se, or the plan is not to have debt, we'll never really get away from. Things like property taxes, a homeowners association fee, utility bills, transportation expenses, and of course, putting food on the table, just to name the least. We view those as fixed or essential expenses. And our goal is to have all of those fixed or essential expenses covered by a guaranteed source of income. So that in a year like last year in 2022, while almost every asset class had a negative return, we don't have to worry about where we're going to pay our bills every month when the markets go down. We then have certain things in our retirement that are discretionary, that we would call lifestyle type expenses. Golf, vacations, shopping, gifting to kids or grandkids, to name just a few. Those are discretionary, and to offset the risk of negative markets or down markets, what we like to do for our clients is have a 2 to 3 year buffer at a minimum of cash or cash equivalents on the balance sheet to utilize to cover those discretionary expenses, so that when markets go down, not if, that we don't have to sell out of securities to fund those potential expenses. Or furthermore, if those expenses are things that we can put off, like maybe gifting versus our trip to Italy as an example, where we might not want to put that off because we don't know what health we're going to be in, we at least can make those conscious decisions to put off some of those discretionary expenses if we choose to do that. And so another reason that we think the 4% rule is not always the best to use versus this methodology, which we feel is a much better way of structuring your income needs in retirement, is to help control those down markets and how we have income coming in to cover both your fixed or essential expenses and your discretionary expenses moving forward. There's a lot more detail in here, and so if you've got further questions around this, if this topic is relevant to you or a loved one, hop on our website at instrumentalwealth.com, schedule some time with one of our advisors, as we'd love to have a deeper conversation with you around this. Thanks, everybody. Have a wonderful day.